Hey everyone, welcome back to the channel where we unpack the silver market like no one else, daily deep dives, real-time analysis, and zero fluff. I'm your host, and today we're going full throttle on the silver news explosion. Prices are smashing through ceilings, miners are surging, and the bulls are in total control. If you're stacking silver, trading futures, or just watching the metals space, this is your must-watch rundown. Hit that like button if you're riding this wave, subscribe for these extended cuts, and turn on notifications. We're talking a marathon breakdown today, so settle in with your notes. Right out of the gate, silver is on an absolute tear. Spot prices hit a blistering peak just shy of the mark, clocking in with a massive daily jump that has everyone talking. We're seeing it trade around the high 70s per ounce right now, up a solid tick from yesterday, and that's after breaking past big psychological levels like 70 and pushing into the 70s earlier this week. Over the past month, this metal has rocketed nearly 40%, and year to date, the gains are off the charts. Think triple digits in growth that no one saw coming at this pace. Why is silver defying gravity? Let's break it down layer by layer, starting with the supply crunch that's straight out of a textbook nightmare for bears. Mine output just can't keep up. Global production is lagging way behind demand, and recycling efforts are falling short. Industrial users are gobbling it up for solar panels, electric vehicles, electronics, and medical tech, creating this structural deficit that's been building for months. Add in the shiny designation as a critical mineral in key markets, and you've got locked-in demand that isn't going anywhere. Zooming into today's action, Hexag class USD, that's silver against the dollar, is cruising inside a textbook bullish channel. Moving averages are screaming buy. Prices have sliced right through signal lines, showing real buying pressure from institutions and specs alike. Right now, it's hovering in the low 70s range at publish time, but the forecast is crystal clear. Expect a pullback test of that key support floor first. From there, a bounce sends it screaming higher, targeting way above the mid-70s zone. Technicals don't lie here. The relative strength index is eyeing that support line, which would be your green light for more upside. A clean test and hold. Bulls reload and charge. But flip the script. A bounce off the channel's lower edge, or worse, a break below that critical floor, flips the whole narrative bearish, opening the door to sub-60s territory. For now, though, resistance at the upper end gets cracked, and consolidation above the low 70s accelerates the party. Shifting to the miners, because silver stocks are where the real money's printing right now. Hecla Mining just got a massive boost from landing in the S&P Midcap 400 index. Talk about validation amid record prices. Their stock surged on that news late last week, and with silver at these levels, analysts are eyeing strong outlooks into next year. Pan American Silver is in the spotlight pre-market today. Watch for analyst upgrades as prices hold these highs. First, Majestic Silver's got key forecasts dropping too, with traders positioning ahead of the open. These aren't just names, they're leveraged plays on the spot price, and with equities catching the metal's fire, portfolios are lighting up. Historical context to blow your mind. Just days ago, silver shattered 70 and powered above 71, with analysts penciling in 75 as the next stop. Fast forward to today, and we're dancing near all-time peaks below 75, up over 4% in a single session early morning. That's not hype. That's tight supply meeting panic buying from industrials and safe haven chasers. Historical context to blow your mind. Just days ago, silver shattered 70 and powered above 71, with analysts penciling in 75 as the next stop. Fast forward to today, and we're dancing near all-time peaks below 75, up over 4% in a single session early morning. That's not hype. That's tight supply meeting panic buying from industrials and safe haven chasers. Economic drivers? The US dollar's on the ropes, thanks to Fed rate cut bets solidifying. Traders are pricing in multiple easings next year, making yieldless silver a no-brainer over bonds. Inflation whispers are back. Geopolitical tensions, from energy sanctions to cyber disruptions in oil flows, are pushing risk-off money into precious metals. Gold's tagging along, but silver's leading the charge with that industrial kicker. Let's double-click on the forecast for the rest of today and into the weekend. That correction to test support is probable. Smart money sells the rip, buys the dip. Hold above it, rebound to fresh highs above 77 plus. Invalidation comes on a drop through that channel low, targeting the low 60s. Models are bullish overall. Acceleration on resistance breaks, steady climb in the channel. Investor implications. If you're holding physical bars or coins, you're sitting on unrealized gains that could double again if this holds. ETF's tracking spot are inflows central. Miners, leveraged upside, but volatility kings. Hecla, Pan Am, First Majestic could see 10% swings today alone. Industrial buyers, hedge now because input costs are spiking. Traders, scalp that support test. Go long on the bounce with stops tight. Quick strategy session. For day traders, watch pre-market miner pops. PAS and AG could gap up. Spot traders, Bias long above the channel midline, targets layered to highs. Long-term stackers. This supply-demand imbalance is your thesis validated. Load on weakness. Global angle. Asia closed with metal strong. Europe's eyeing the open amid ECB murmurs. Oil volatility from tanker issues spills over, boosting silver as the ultimate hedge. Deeper technical teardown. That bullish channel. Price action hugging the upper rail. MAs stacked bullish. RSI coiling for support bounce. Volume picking up on upsides, thinning on pullbacks. Classic bull flag potential. Miner spotlights expanded. Hekla's mid-cap inclusion means ETF inflows galore, juicing shares higher into records. Pan American's forecasts, analysts hiking targets on production beats and price tailwinds. First Majestic's pre-open buzz, cost controls meeting sky-high silver watch volume. Supply-demand deep dive. Silver Institute data echoes the deficit, hundreds of millions ounces short annually now. Solar alone chews 50% more yearly. EVs, double-digit megatrends. No new mines online fast enough. Risks unpacked. Hawkish Fed surprise kills cuts. Dollar roars back. Geopolitics de-escalate suddenly. But probabilities favor bulls. RSI support, channel intact. Portfolio blueprint, allocate 10 to 20% metals. Silver overweight for growth, gold for stability. Pairs trade miners versus spot if you're advanced. Live trade ideas, long ZAG USD on support hold. Target resistance, trail stops. Miner basket, equal weight. Hekla, Paz, AG, ride the sector, beta. Q&A from you legends and comments. When to buy the dip? At support test. Sell targets? Above 77. Physical storage? Allocated vaults? Bear case probability? Low, under 20%. Sunrise watch list. Pre-market pay-as action. Spot at peak, minor gaps. Macro ties. Fed minutes loom next week. Rate path clarity. Dollar index breaking down supports silver. Sentiment gauge. Twitter, Reddit, forums all frothy. Retail piling in late. Institutions led early. Chart walkthrough. Imagine this. Bullish channel from 60s low, price at 71.93 pivot, support 68.05 underlined red, target 77.95 circled green, breakout above 72.65, moontime. Newsflash recap, spot peaks near 75 on supply tightness, silver at 74 plus, monthly 40% rip, miners surge on index ads and prices, extended forecast scenarios, base case, test support, rebound higher, bull supercycle, channel breakout to 80s, bear trap, fake out below support, then rip higher. Why silver over gold? Higher beta, industrial demand multiplier. Gains twice as fast in rallies. Let's talk tax strategy for winners because nobody wants Uncle Sam crashing the party when silver is printing. The biggest edge most people miss is time. Long-term holds are your real advantage. Hold physical silver coins, bars, or even qualified ETFs for more than a year, and you unlock long-term capital gains instead of short-term ordinary income. That difference is massive. You're looking at mid-teens federal rates instead of top bracket levels that can climb north of 30% depending on income and filing status. Play your exits like a chess grandmaster. Spread sales across multiple years so you don't spike into higher brackets. Offset gains by harvesting losses from other positions. If you're stacking through retirement accounts, Roth conversions can be lethal tools when used correctly. Physical silver is treated as a collectible for most casual investors, which means higher tax rates. But ETFs avoid that landmine. State taxes are the silent killer. Zero in places like Texas or Florida, brutal in states like California. If you're playing big, geography matters. Keep immaculate cost basis records from day one. FIFO accounting usually minimizes taxes in rising markets. And yes, talk to a tax professional. This isn't advice, just battle-tested intel to help you keep more metal in your stack. Now let's throw it to the community. Drop your silver price target for the end of the quarter in the comments right now. Are you calling 75, 80, triple digits? Early calls are clustering in the high 70s, but fresh forecasts are rolling in fast. Let's crowdsource this move. I'll start. Base case just under 78 by quarter end. Bull case clears 80 if support holds. Tag someone stacking silver and let's build the hive mind. Top predictions, get shoutouts next drop. Let's lock the core again so nobody misses it. Silver is trading near the low 70s today. Miners are on fire with leveraged upside. Bulls are fully in control of this tape. And no, we're nowhere near done. This rally has legs. Now zoom out, because silver never moves alone. Gold is smashing records as well, flirting with historic highs on safe haven flows, but silver is the percentage monster. It's massively outperforming year to date, and the reason is simple. Industrial demand. Solar, EVs, advanced tech. Silver has a turbocharger that gold doesn't. Higher beta means bigger swings, but right now it's all upside. Platinum is lagging, stuck under pressure from auto demand and excess supply. Copper is steady on green energy optimism, but lacks fireworks. Silver stands alone. Green days dominate recent sessions. Volatility is elevated but controlled. And the gold to silver ratio is compressing fast. If that ratio moves toward historical extremes, the upside math gets explosive. Analyst forecasts are getting aggressive. Short-term models are calling rapid continuation higher. Longer-term projections stretch into the high double digits and beyond. Some macro voices are openly calling for triple-digit silver within the next cycle if monetary debasement and industrial deficits persist. Conservative banks still project moderation, but even their upper bands imply significant upside from current levels. Retail sentiment is frothy, analysts are divided, but the trend remains intact. The quiet accelerant here is regulation. Silver is now treated as a critical mineral across multiple major economies. That unlocks subsidies, grants, and mandates for solar panels, defense systems, batteries, and advanced manufacturing. Demand gets locked in while supply cannot respond fast enough. Add geopolitical stress, sanctions, shipping disruptions, and fragile supply chains, and the squeeze tightens. Short-term outlook gets tactical. Thin volume can mean chop, but the key zone just below 70 is critical. A dip there could flush weak hands before a sharp rebound. Futures hint at volatility, but dollar weakness continues as rate cut expectations build. Strategy stays the same. Scale into physical on pullbacks, selectively add miners for leverage, stay nimble. Bias remains aggressively bullish. Risk-reward favors buyers on dips. Near-term targets sit in the high 70s, medium-term in the 90s. Long-term scenarios go far higher if the macro thesis plays out. Invalidation comes only if key support fails decisively. Until then, trend is your friend. History matters. The last comparable silver run was over a decade ago, but this time deficits are real, not speculative. Inflation-adjusted highs remain far above current prices, while money supply has exploded since. Industrial demand alone is rewriting the supply equation. Mines can't ramp quickly. That imbalance doesn't resolve quietly. Miners amplify everything. Large producers are attracting institutional flows. Mid-caps are seeing upgrades on production efficiency and cost control. High beta names move multiple times the metal itself, and that leverage cuts both ways. But in bull markets, it's rocket fuel. Portfolio construction matters. A modest metals allocation can dramatically alter risk-adjusted returns. Silver brings growth. Gold brings stability. Rebalance systematically. Don't chase emotionally. Physical holders should prioritize insured, allocated storage and avoid unnecessary counterparty risk. Sentiment is white-hot. Social platforms are buzzing. Retail is arriving late, but positioning data shows smart money led the move. Charts confirm it. Higher highs, higher lows, compressed resistance overhead. Momentum is coiling, not breaking. Macro winds stay supportive. Rate cuts loom, real yields struggle, and geopolitical risk hasn't gone anywhere. That's the cocktail silver thrives on. So here's the takeaway. Silver is strong, demand is real. Supply is constrained. Momentum is intact. Targets keep rising. Whether you're stacking physical trading miners or writing paper exposure, the trend is clear. Drop your price targets below. Smash the like if you're positioned. Share this with someone still asleep. Stay sharp, stay disciplined, and keep stacking. Stay shiny.